spotlight on some interesting stocks and companies, and Zaggle is the next one on our radar. Before we go any forward, it's important to note the kind of price traction that the stock has seen. It's a recent listing, listed in September of last year, and the stock has already doubled since then. Let's pull up the 1 year will not really be a 1 year because, as I said, it's a recent listing, but that's the 3-month performance that you have. I think it started its journey on the street at around 150, and the stock is already at 320 right now. Now, there's also news on Zaggle because in the last couple of days, we saw it announce quite a few agreements with more companies, more customers, the recent ones being with Easy Trip Planners for travel and expense management solutions, and also an agreement with Benetton. Let's talk more about this and understand the business prospects and the trends from here on. We have the company's management joining in. Avinash Godkhindi, the co-promoter, MD and CEO of Zaggle Prepaid. Avinash, great to have you with us on the show. So it's been great going. I mean, your investors are absolutely loving everything that you're delivering. Let's start by understanding what a lot of these new alliances bring on the table. As I said, there's Easy Trip Planners, there's Benetton, a couple of others as well. So how do they sort of start contributing to the top line? What's the time frame we're looking at?
Firstly, thank you so much for having me on the show. Truly appreciate it. And yes, it's been good times for us. We've been consistently trying to deliver value to all our stakeholders, and some of that is yielding result. Look, the 3 types of contracts that we're signing. One, we announced our partnership with Axis Bank on our corporate credit card portfolio, where the platform is a Zaggle platform for expense management, for accounts payable, and bundled with a corporate credit card from Axis Bank, right? So that's an offering that we're taking. The second piece that you mentioned, which is the EMT, Ease My Trip partnership, where one of the big components of an expense management platform is to be able to offer a seamless T&E experience, travel and entertainment experience. And that's a very large chunk of the overall expenses that employees incur in any corporate, typically. And we have other partners, but EMT is a big one that we have signed up. And through the API integrations that we would have with EMT, our employees of our corporate customers would now be able to make their travel bookings through the Zaggle app and dashboard on EMT seamlessly. While the policy gets enforced through our Zaggle platform, the actual booking of the travel, the hotels, the holidays, everything happens on EMT. We also earn commissions for each booking that's made. So that's an additional revenue stream. And then the third type of contracts that we are signing and which we are announcing, the larger ones are partnerships, corporate customers like Benetton, like Wipro, like Quest Corp, and a whole host of these. The larger ones we are announcing to the market then.
No, sure. So just translate this into the revenue implication as well. EMT, like you're saying, is pretty big on the travel side. Then you have all these corporate clients coming in, and there's the partnership with Axis Bank. So Q3, you did a top line run rate of, I think, around 200 crores. So now with a lot of these new customers in the kitty, what is the revenue implication?
See, in our business, a lot of these partnerships take time to fructify because you're doing a bank partnership, an EMT partnership. Some of these large accounts like Times of India, etc., will take some time to go live as well. So in terms of immediate impact on Q4, it won't be necessarily for the contracts that we have signed now. It would be for the contracts that we've signed in the previous years and previous quarters, right? Each of these contracts typically is about 3 to 5 years. And that, again, gives you a sense of what's the ramp up in terms of revenue. And a lot of these contracts also are auto renewal. So they renew for perpetuity, right?
So can you put a number to it?
It's not that these...
No, I get that these don't, I mean, it's not a switch that turns on immediately. I get that they take time to ramp up.
Correct.
But overall, what is the revenue potential, say over, maybe 12 months, 15, 16 months, whatever it is that you're looking at, the time frame and the total potential?
See, I wouldn't be able to give you a rupee number or quantify, but these are large contracts. These are significant for our business, both strategically and in terms of revenue. And that's why we've come out with the disclosure. They're materially important. We believe they're materially important to our business. And, in terms of our Q4, we've already given a guidance that, for the year, we had said we'd be somewhere between 40 to 50% growth, and we're very confident that we'll be able to meet those guidances.
Fair, Avinash, but if it would have been great if you could have shared a number, because we agree to the fact that they will take time to start accruing to the P&L. But now that you've done a 200 crore revenue run rate, say by the end of FY25, do you assume that this 200 crore would become a much more or at least double compared to what it is right now?
So the way we want to take a conservative route in these matters, what we've given as a guidance is for the next financial year, a 40% plus growth. And we stick by that. And we believe that, we'll be able to, we're fairly confident that we'll be able to achieve that.
So, and what about margins, Avinash? 10.5% this quarter. Do you see in Q3, but do you see that trajectory sustaining double digits for the quarters ahead as well?
We've given a guidance of an adjusted EBITDA of 11 to 13% for this year. And again, we're confident that we'll be able to, maintain that.
Okay, fair enough. I get that you don't want to give a specific number on these particular contracts and alliances that you've signed. But, as the business grows, because you're so confident, you're saying 40% plus growth on the top line this year. Is there a steady state sort of quarterly run rate that you've arrived at that, Zaggle would be doing, say, 300 to 350 crores of revenue per quarter? I mean, some kind of an internal benchmark that you perhaps will set going into the new fiscal year.
Look, what happens is that the spend management space is a fairly nascent space in India, and we are the leading player. Every company needs to digitize. Every company needs the compliance, needs to reduce leakage, needs to make sure that there's, that ESG goals are met, So all these needs are fairly universal, and everybody has employees, everybody has vendors, and many companies have channel partners. So you're catering to a very large opportunity here in Zaggle. So rather than putting it across as a specific number, we would look for that overall guidance of 40% plus, keeping in mind that our business has seasonality. So we look at our numbers YOY and not Q on Q. Q3, Q4 are generally our best quarters. Q1, Q2 are a little subdued because both incentives for channel partners as well as, employees submitting their reimbursements, etc. Everything is a little bit of a lull in the first 6 months, and then Diwali and the festive season and the last quarter pressures for companies to drive revenue kicks in. And that helps us, and also for employees for their, reimbursements. They want to claim all their reimbursements before the financial year. So that's where the expense management revenue also kicks in.
All right, Avinash, we'll leave it at that. Thank you so much for joining in and sharing your outlook on the times ahead. Congratulations as well on the large contracts that you have signed. That was the management of Zaggle. The stock not doing very well today, but it has done very well in 6 months that it is listed, doubled from its IPO price. A very significant shareholder that they have as well, that is Ashish Kacholia. He has a 2.2% stake in the company as well. That's Zaggle for you, 2.5% lower. They're currently at 321. Let's take a short break.